Good morning, everyone. It's November the 19th, 2015. Time to kick off another trading day. Yesterday was a pretty interesting day. The Fed came out and pretty much said that if things don't change between now and December the 16th, we're raising interest rates. And they've been talking about it all year long. A lot of people have said if the Fed don't raise interest rate, they lose face. They lose all sorts of confidence in what they're doing. It was based on the fact that the economy keeps doing what it's doing right now. So they do have some wiggle room. And normally that announcement would take both stocks, bonds, and gold down. But they didn't. They rallied yesterday. And the reason for that, according to Goldman, is that the Fed raises interest rates, but increase QE. Now, normally when interest rates start going up to attract an investor or buyer or purchaser, they expect interest rates to go up in the future if conditions warrant. But if the central banks of the world become the buyers of first resort, not just last resort like that, issuers don't have to raise interest rates on their paper significantly to attract and hold the buyers. The Fed's going to buy it from them. Long term, this is really bad because the central banks end up owning everything. I mean, the federal government, I think today, I don't know what the number is, but owns over 50% of the land in the United States. We already see that their balance sheet, I believe, is about $3 trillion right now. It might be a little less than that. In treasury paper, and that's kept repo rates, etc., down low. We know that Japan's central bank buys stocks. It's rumored that the United States central bank is buying stocks to the Swiss National Bank. Hard to know, but Citadel anyway. That's the deal. So an issuer doesn't have to raise rates. Interest rates stay low on a historical basis. The Fed buys paper and keeps interest rates low by doing that. Buy stocks, buy bonds. Why buy bonds and treasuries? Because the market's been heavily sold. That's not the case in the E-mini. The E-mini is rallied. So we have option expiration tomorrow for both stocks and bonds, and that favors a close between 127 and 126 on the 30-year, on the 10-year, and 153, 155 on the 30-year is the play. So we have resistance at 24, 28, sell 1, 31 to 03, sell 2. We'll play for a trading range. Option expiration will hold the market between 126 and 127. On the buy side, 13 to 17, then 5 to 9. So the first thing we're going to look for today, does the inverse relationship hold or not? And we should get a pretty good read on that. Early on, we do have some news. Given the fact that it's the only news, it might swing the markets. Jobless claims at 270. Philly Fed at 0 or unchanged. LEI, and again, leading economic indicators, the markets, we're not in economic contraction right now, so its impact is minimal for two reasons. One, the interest rate component, and the other, we're not in a recession. And then natural gas inventories at 23 BCF. So that's it for the 10-year. It's just amazing, you know. You think that things kind of settle down and get back to normal and stabilize, but they're not. Things are more unhinged and looser as we move on. And chaos is, if you create chaos and uncertainty, that's one of the ploys. to stay in power that dictators have used for time immemorial, and rulers. And things get bad, go stir up a war someplace. You can't change horses in the middle of the stream, right? Okay, resistance is 16 to 20. That is sell 1. And we're right there. We're at it. If we get through that, 31 to 03. Basically leaning against 155, one of those pretty round numbers. On the buy side, the breakout came at 54.02. We're at 14, so 1 to 5, buy 1. And then 21 to 25, buy 2. Got to give this baby some room because it moves. Looking at gold, got a seller above 1075. We did get stops below 1072.50. We have rejected prices below 65, so we're at 72. 65, 67, buy 1. 60, 62, buy 2. 75, 77, sell 1. 80, 82, sell 2. Okay, China last night lowered their interest rates for their standing lending facility, which is their support for the markets, significantly by a couple of percentage interest rate percentages, not a couple hundred basis points, and that is significant. It did support the euro that way. More QE. Stock markets around the world followed our lead yesterday, helped along by China's cutting of their interest rates, which more bucks for the players out there. So our number 2 sell zone yesterday was 725, sell 1. 750, sell 2. When China cuts their devalues their currency, rallies the euro, that would be a form of market support. So that's what people are attributing the strength to the euro. From 106.75 is where buy 1 is. 650 is buy 2. Like the idea of getting short. Okay, crude was also mentioned. In yesterday's Goldman article, economic strength, Saudi Arabia came out overnight and also said that producers are going to have to raise production to meet demand, and they're not doing that right now. That's kind of an interesting take, seeing how storage is filled up around the globe. So this 42.50 is prime sell territory. The spill was from 41, so 42 and a quarter, sell 1. 50 to 75, sell 2. On the buy side, looks like we're trading lower, so 41, 40, 75, buy 1. And then 40 and a quarter, 40, 50, buy 2. Be picking up this area right here, that value area low right there on the sell side, leaning against maybe 41.90, 95 by the time we get in. You all in London just have a beautiful, beautiful advantage over us because London can turn a lot of markets. And gold, currency, crude oil, because of the Brent contract. Beautiful setups. And the trades don't happen quickly. You got time to sit there and watch them. And they do trade technically. They will lean against support and resistance. And the reason for that, the market is technical. The banks around the globe, the trading desks, are the clout. They are the market. They know where support and resistance are, and as a market maker, you're willing to buy support and sell resistance. So that's why the overnight markets are as reliable as they are. Okay, looking at the F1 screen on the E-mini. This 90 area right here, didn't quite get there. Getting stops above 90 looks pretty reasonable. We have this high right here and the high volume number in the 95 area. And we do have 4-point price increments on that, so there are some rounding errors. So 95, 97. Then basically it's going to be 2100, 2110. Day before yesterday, play in options. Was 2060s. Yesterday's play was 2075. Don't be surprised to see if today's play in options, call options, is 2100. The squeeze is on. And you can see right here that pretty clean 2100 is where the market has rejected prices. 2100, 2110, and we're there. We've taken out those 3 bars right there where that sell down began or accelerated. So we are at resistance. Didn't quite make 90. So, I mean, there's no magic here. Selling the 88 area, 90. Failure to take it out, you can make a sell failure. Then basically 9500 to 2100. The breakout came from 6650. So you can just see we've got this 77 right here. Last rotate down in Asia was 80. So 75 to 80 by 1. And 65 to 70 by 2. A little wide, but we'll get our setups, and we know what our setups are. When we get in those areas, we want to think in terms of being a buyer. Okay, it's going to take a bit to get everything up and posted. Going to do it. Be with you as soon as possible.